We've set out to do a number of things with the company, and we're seeing them start to come through. So we're quite happy. We think these represent a good set of results. Most importantly, we've been trying to accelerate the growth of the company, and we're now on track to deliver our strongest year of growth for several years in Unilever. We also set out to step up competitiveness, and we're winning market share in more places than we have for several years. To get to your question, we've made it clear that the US, China, and India are our overarching priority markets, and we're seeing very strong growth in all three. We've made e-commerce a priority, and our e-commerce business grew 38% in the quarter. It's now 12% of Unilever. And a couple of our new toys, Prestige Beauty and Functional Nutrition, are both growing over 20%. They're both on track to exceed €1 billion of turnover this year. And I think importantly, we have confirmed our guidance for 2021 margins as being around flat for the year.
Well, on that note, what are you seeing in terms of inflationary cost pressures, and what is your expectation around the extent to which you'll be able to pass on higher costs to your end markets?
Yeah, well, you're certainly right. We're seeing commodity inflation across really every type of input cost that we have: agricultural commodities, petrochemical commodities, paper and board, transport, logistics, energy, labor, all moving in an upward direction. Now, our first reflex is to fire up our productivity programs and try and save as much money as we can and avoid taking price. However, this is once in 2 decade inflationary pressure, and so we have increased prices, price growth of about 4% in the latest quarter. And that will land in quite an uneven way around the world because it's also impacted by Forex movements in markets. But we'll first try to use savings to offset these increases, but there will be some price increases around the world, yes.
You've had to adjust your margin guidance in the past, and I'm just curious how much visibility you have and how much confidence you have that you'll be able to meet these full year margin targets.
Yeah, well, look, with only 2.5 months to go, we wouldn't have firmly guided to around flat if we weren't fairly confident to deliver that. But it is certainly a volatile environment. Both living in New York or London, it does feel that we're coming out the other end of COVID. It feels a little different if you're living in Jakarta or Bangkok or Manila or Ho Chi Minh City, where COVID's still having an impact. And we saw quite soft business performance in Southeast Asia, for example, as COVID stays there. So we're dealing with both inflationary pressures and continued volatility due to COVID and other factors. But as I said, we're still confident to guide for around flat for the year on our margins.